Joining us now is Frank Holmes, U.S. global investor. Here's another name. We had Peter Schiffer earlier. Here's a guy that we know very well as well, our viewers. So let's start. Frank, good to see you. Thanks for doing this, by the way.
It's great to be with you.
So you're often known for the life cycle of various asset classes. So you're going to sort of give us a little lesson here and tie it all together with mining and crypto and cannabis. So where are we in the mining cycle, for example?
So when you look at small cap companies that are industrial or it doesn't matter what small cap, the big money is made on the S curve, they call it, where all of a sudden there's adoption of the product or the service and they start to take off, and it can last 7 to 8 years. You get this big run. If you were there early with Starbucks, they made a fortune on it. The same thing happens when it comes to mining or very speculative investments. You get what's called the Gartner hype cycle, and you go parabolic and you have this big crash and everyone becomes disillusioned, and then that's when the S curve starts.
So Bitcoin, $20,000, that's the hype.
That's the hype.
Yeah.
It's crashed, and then cannabis crashed, and gold mining, junior mining crashed back in 2013, 14. And we're seeing the metals, not across the board, but we're seeing the gold mining stocks all of a sudden come back to life. And you have exceptionally smart people like Ross Beatty, the humble billionaire, that is building a gold mining company. Remember, this is the guy that built the biggest silver mining company in the world, and then he built the biggest copper play, and now he believes that the next big theme is gold. And he's buying gold assets to get up to a 1 million ounce gold producer because they get re-rated, and he believes the wind is at our back, not in our face. So I think that for investors, they have to really respect these cycles. At the same time, when smart money comes in, if all of a sudden position himself, then now you want to take a look at these small caps.
So that breakout in gold in the spring of last year to a 6-year high, you think that was the real deal, and now it's back. It's settled back a little. What are we talking, 1550 around these levels right now? But so you think that this is the real deal, and then add other macro factors, what the Fed is doing and so on. What does 2020 look like for gold? This is really the time to get in for investors?
Well, short term, you have a risk that it's a crowded trade. That is, a lot of this last run up was futures prices. They're leveraged 30 to 1. And then they can pivot quickly, all of a sudden you get a tumble down. And we're coming up to the year of the rat, Chinese New Year. And usually that's a peak short term for gold, and you get a sell off and then you just buy them. And I think you just want to go be able to buy good quality stocks, etc. But you have to be more selective now when it comes to exploration, because there's so many more regulations from the last crash that have come in that makes it very difficult to raise capital unless you've got a new way of exploring and looking for reserves. The cost of ESG that's become very significant for big mining companies to get into a pension fund, etc. ESG stands for the environment, their sustainability, and their corporate governance. It's now impacting exploration companies. So all your money's not going to exploration, it's going to social welfare too. So that means there's less capital really going into this space. So I believe because of that, we could get a huge run up in commodities, but a lot of the juniors would not participate. The royalty companies would, because they already have the moat around their royalty. The senior mining companies and developers that are already there, but the explorers are going to have more difficulty. So that's the reason why I invested in Gold Spot, because the quant approach is going to help them.
Now, one of the things you're talking about in terms of a keynote speech here at VRIC is the quant approach, which we probably don't have time for, but let's talk about something else you're going to be discussing, which is Chindia, China, India. You had early exposure to Chinese culture at a young age. So what's the key to know about China and India right now?
Don't bet against China. It's just a challenge to bet, because they've been sending their best brains to American and to Canadian and European schools. The best brains. When I was at Jarvis in the 70s, 30% of our school was Chinese, and we were #1 in all science gold medalists in competition across Canada.
Okay, Jarvis Collegiate in Toronto, for those who don't know. And for those who don't know, I didn't know actually, I should have, but, and this is a compliment, you talk like an American, you're very confident, you're animated, but this guy's from Toronto, grew up in Toronto years ago, was a Golden Gloves boxer.
I was 30 years ago, I moved to Texas, and I like to tell people I'm a Tex-Can. Y'all come back, eh? But what's important in these macro factors is that India too has been sending their best brains, and we know the significance of, in Canada, especially like Brampton, we can see the significance here. The world's changing, and China and India, where 10% of all gold demand 30 years ago. Today they're 53%. And mostly because of love. They buy gold because of love.
The love trade.
The love trade, and it's highly correlated with rising GDP per capita. Guess who the biggest GDP per capita is today? China. Guess who the biggest middle class in the world is? China. It gets lost in 1.4 billion people, but 130 million middle class making $100,000 a year, they've now dominated global travel. So I'm very, very bullish. The supply side of looking for metals is going to be restricted. I believe that we can get this massive surge. It'll be hard to explore, it'll be hard to develop with ESG, compliance costs, etc. So those that already have the assets are the ones that are going to explode in valuation.
Thanks, Frank. Appreciate it. All right, Frank Holmes, U.S. Global Investors.